In this video, we are going to be going over how I made 1% buying the Australian dollar against the Swiss franc. Inside the macro hub, we could see that for the Australian dollar, that we had a bullish bias due to the Australian dollar being positioned for a bullish 24 hours due to the May rate hike being priced in at around 92.5%, combined with a hawkish inflation backdrop that supports rate differential widening versus the US dollar. As we can see here at the bottom, it says over the next 24 hours the Australian dollar should drift higher as positioning locks in pre-decision carry and the inflation narrative remains intact with the realistic move band 0.7166 to 0.7227. If we come down to the scenarios tab here, we can see that there is a 72% chance that there is a carry bid which accelerates into the decision, meaning there's a 72% chance that the Australian dollar gains some strength prior to the rate decision. If we look in the live news section here, we can see that Reuters came out and stated that the RBA is to raise their cash rate to 4.35% on May 5th, and growing minority of economists actually expect a further rise in rates, so a continually hawkish central bank. Moving over to the institutional insights, we can see that JP Morgan for one were bullish on the Australian dollar on crosses, and so was the Bank of America. Moving on to the Swiss franc, we can see that the AI daily bias actually gave a bearish reading for the Swiss franc due to a combination of risk on sentiment and dovish SNB repricing following the March rate cut. If we look at what the institutions are saying, we can see that JP Morgan actually are preferring a short position on the Swiss franc, which helps our narrative. Looking here, the Bank of America also prefer short positions in the Swiss franc. All these factors together, I waited for price to come into a nice demand zone near the 0.56 handle, where I targeted a 1-to-1 risk to reward ratio and walked away with 1% profit.